Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on the review of Nigeria's Q4 2024 foreign trade in good numbers. The National Bureau of Statistics (NBS) recently published Nigeria's fourth quarter 2024, October to December foreign trade in goods, physical goods, or merchandise trade numbers. These numbers reveal that the total foreign trade rose marginally by 2% or 786 billion naira quarter-on-quarter to 36.6 trillion naira from 35.8 trillion naira recorded in the previous quarter, Q3 2024, July to September, and rose 68% or 14.9 trillion naira year-on-year relative to 21.7 trillion naira in Q4 2023. Total trade grew by 106% or 71 trillion naira year-on-year in 2024 relative to 2023 due to the devaluation of the naira. Foreign trade involves buying and selling goods, services, and capital across international borders. Each country has its own needs and resources, and foreign trade enables countries to fulfill those needs by importing goods and services that they cannot produce sufficiently domestically and exporting surplus goods. Based on the report, total imports improved by 8.6% or 1.3 trillion naira quarter-on-quarter to 16.6 trillion naira in Q4 2024 from 15.2 trillion naira in Q3 2024. Similarly, it increased by 83% year-on-year from 90 trillion naira in Q4 2023. The increase in the value of imports can be mainly attributed to the devaluation of the naira at the official market. The naira appreciated slightly by 2.7% quarter-on-quarter but declined 26.7% year-on-year from 1,690 naira per dollar at the end of September 2024 and 1,205 per dollar at the end of December 2023 relative to 1,645 naira per dollar as at the end of December 2024. On the other hand, total exports dipped 2.5% quarter-on-quarter to 20 trillion naira in Q4 2024 compared to 20.5 trillion naira in Q3 2024, but was up 58% year-on-year from 12.7 trillion naira recorded in Q4 2023. The quarter-on-quarter decline may be linked to the naira appreciation within the period under review, as oil production improved 4.8% quarter-on-quarter but declined marginally by 1.3% year-on-year to 1.54 million barrels per day as of December 2024. Nigeria's trade balance was positive. Exports exceed imports, although it shrank 35% quarter-on-quarter or 1.8 trillion naira to 3.4 trillion naira in Q4 2024 from 5.3 trillion naira in Q3 2024. Exports accounted for 55% of total trade, while imports were 45% in Q4 2024 compared to the ratio of 57% to 43% in Q3 2024. The increase in imports in Q4 2024 may be linked to the festive season demand. The top 5 trade destinations in Q4 2024 include export trading partners such as the Netherlands, 10% or 2.1 trillion naira, France, 10% or 1.9 trillion naira, Spain, 9% or 1.7 trillion naira, India, 8% or 1.6 trillion naira, and Indonesia, 7% or 1.4 trillion naira. The top import trading partners include China, 28% or 4.6 trillion naira, India 11% or 1.9 trillion naira, Belgium 8% or 1.4 trillion naira, and the US 6% or 1.1 trillion naira, and France 4% or 0.6 trillion naira. South Africa remains our top trading partner in Africa with exports and import values of 761 billion naira and 149 billion naira respectively. By ports, Apapa Port accounted for 90% and 61% of total exports and imports in Q4 2024, while Tin Can Island followed with 7% and 10% of exports and imports in Q4 2024 respectively. Our thoughts: 1. In Q4 2024, the share of agriculture and manufacturing products in total exports stayed low at 5.7% versus 6.3% in imports and 3% versus 44.1% in imports, respectively. The share of oil and oil-related products remain high at 88.2%. This continues to show Nigeria's over-resilience on oil for FX without any clear path to improving exports from agriculture and manufacturing. 2. The top agricultural products products exported in Q4 2024 were cocoa beans, cashew nuts in shell, and sesame seeds, accounting for 1.3 trillion naira or 6.7% of the quarter's exports. This marks a significant improvement compared to Q3 2024, where figures stood at 648 billion naira or 3.2%. While the improvement is commendable, we believe these are areas in which the government should intensify efforts to expand exports to create constant FX supply and jobs. 3. Based on imports by economic regions, Asia and Europe account for 85% or 14.2 trillion naira of the total imports. Manufactured goods from Asia accounted for 37% of total imports, mostly from China. 4. Given the concentration of 90% for exports and 7% for Tin Can Island, the Apapa port needs to be decongested. This will make exports more efficient and improve business activities. 5. Additionally, deliberate efforts to add value to our abundant results are essential to earning more value from the exports rather than exporting raw materials and importing finished goods. This will boost employment in the country and reduce insecurity. 6. The government requires support from the private sector as its revenue is under considerable pressure. The sector can contribute by investing in value-added activities and promoting the exports of local manufactured products. In summary, efforts must be intensified to tackle the persistent export challenges by prioritizing policies that foster the growth of the manufacturing and agricultural sectors, enhance value addition, and create an enabling environment for businesses to thrive. We believe that the refining of petroleum products by Dangote Refinery and government-owned refineries should reduce the importation of petroleum products, thereby improving our trade balance. Finally, to strengthen Nigeria's foreign trade position, urgent needs are to support agriculture and manufacturing, enhance local refining and processing, improve port efficiency and decongestion, encourage private sector investments, reduce dependency on imports. Thank you for listening. Please join us same time for another exciting, interesting, and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.